Welcome to First Trade, the show where we're educating new investors and traders. We recognize that some of us are experienced traders,
and some of us aren't. That's why we wanted to level the playing field and make the markets accessible to everyone.
Thanks for tuning in, and we hope you enjoy the show.
All right. Ladies and gentlemen, welcome to First Trade, episode 10. Wow, we made it 10 episodes in, which is kind of crazy. Time seems to be like flying by with this show. We only do it once a week, but it seems like the weeks are even flying by. Michael, what is up? How's it going? Michael here is our resident stock expert. He is in fact, ladies and gentlemen, the smartest trader in the entire market. So that's why he's on this show teaching you, and I'm clearly the dumbest. Folks, Michael Murray.
That was a bit usual from our different intro. I usually don't get introduced in a positive light.
Yeah.
I don't know where that came from, and I'm not going to take it because I'm definitely not smart. However, I've been holding on to Torchlight, held it through the lows. It did bounce today, so I'm kind of happy about that. But I do
did
think
it bounce to anything above our entry price?
No, in fact, it's not even close to that number.
You're
But
fired.
I take progress in
You're
small
fired.
steps, Donald. Okay?
You're fired.
I'm looking for small progress here. I don't want to die. So, no, I do think it's
They ask
interesting.
you how you are, you just have to say that you're fine when you're not really fine. They ask you.
I don't want to hear that, okay? Listen, it bounced a little bit. I'm kind of happy about that. But I do think it's kind of crazy that we made it to episode 10. Plus, we have our first repeat guest on today, which is pretty dope.
True. Special
but no,
episode.
It's cool, man. Yeah, I mean, when we first started the show, like, you didn't know how to trade. I was still thin. Yeah, it was a different time in our lives, but now we're here.
The
and
good
we're
old
back-
days.
We're back with our repeat guest.
There we go. In fact, yeah, so Mike gave it away there. Guys, we have, by popular request, Mr. John London, a.k.a. Beginner Trading, back on the show, back on First Trade, to teach you guys some chart reading. We're going to go over a little bit more advanced stuff when you're thinking about day trading using charts. And I don't know if you know this, Mike. I don't know if John knows this, but he actually is the highest viewed episode of First Trade. So his episode was the best performing.
Back, John London.
So
That's
there's
awesome,
a reason
dude.
he's back here. And this time, of course, we remembered your feedback. We will be including charts in this episode, considering that it's actually about charts. I don't know why we didn't think about that the first time.
I think we didn't know what we were doing the first time we did
Yeah,
this.
okay, that's fair to say. And well, I am at my desk now, and it's a lot easier to actually do stuff on the show rather than being on stage. So this is a plus. But anyway, Mike.
Should we break into it? Should we?
Yeah,
bring it
why
on?
don't we just get into it?
Yeah, let's hit it.
All right, folks. Is it about that time? I think it's about that time.
Let's break it up this time and not say it's about that time. Let's just say it's time. Here's John London, Beginner Trading. What?
That wasn't the best sound to use in the moment.
What-
What I mean
what
to
are you
say is,
doing?
I was trying to say like I need a sound that says like "stop it, shut up," like because it is about that time. But anyway,
All
let's
right,
bring him
let's
on.
do
get
it.
to yeah.
What's up, guys? Hey, I'm
going
glad to
on,
be
John?
back here. Y'all have me cracking up in the bag here. I'm just laughing. The laughing was really funny too as I came on, but it's good to be back. I'm proud that I am the most viewed episode of First Trade. I take pride in that. Happy to hear that. Glad to be back.
All right, John. So I mean, how has since we've last hung out, how's your trading been? How's this past week been treating you?
Trading's been going well. I've been green for the most part. It's been so slow. I think with all the Dogecoin craziness, a lot of traders have been looking at Dogecoin and looking at those markets and kind of taking the attention away from normal stocks, but it's been profitable enough. It's not always going to be a really exciting time in the market. Sometimes it's just going to be slow. And part of trading is learning when not to trade, if that makes sense. And so it's been a slower time, less trades, but overall it's gone okay.
Hell yeah! Already dropping knowledge on us. I mean, I think that's a good piece of advice to
Yeah, for sure.
I feel like all the good traders know when to, take a break and enjoy life, and they know when the right time is to like dig deep and go at the market, So there you go. That's a little nugget
That
of
was some
knowledge
deep
for you
wisdom.
folks out there.
Nice one, man.
Hey, I try.
The audience wants to know about charting, reading charts. And last time we talked about the VWAP a little bit and how it's your favorite indicator.
Right.
I think what was wanted was a little bit more of an in-depth look at how to actually trade using the VWAP. So would you so kindly, show us how to do this?
Of course. It's my favorite thing ever. I love trading the VWAP, and yeah, we could break it down. Okay, so you can see this purple line right here. Number one, this is the VWAP right here. What it really does, if you're a new trader, is it helps you to judge the sentiment and the trend of a stock, like on an intraday basis, on that specific day. And so for beginners to understand it and how to use it, the first thing you want to look at is whether the stock is above it or below it. That's kind of the first step of analyzing, the sentiment and trend of the stock. Like if you think it's strong or weak, basically. For an example, if it's above the VWAP, it's seen as a upward trend with a strong sentiment. If it's below the VWAP, it's seen as a downward trend or in a weak sentiment, if that makes sense. To go over some examples, I have one here from BNGO, and you can look at this one from yesterday, and you can see, it opened up kind of below the VWAP, which again is this purple line. And then when it crossed over the VWAP, it maintained over that level, throughout the rest of the day. And so this one maintained that upward trend throughout the rest of the day. And every time it pulls back to it, like here and here, a lot of traders are buying these dips, basically betting that it's going to continue this upward trend. We could look at it from the other side as well. If we go to today, really, for BNGO, it started off, it tried to break over it, but then it broke underneath this purple line. And again, it's maintaining a downward trend. And so a lot of short traders really are shorting into these pops, if there's shorts available for this one at least. And you can see, it just maintains this downward trend. And so I think that's the start of understanding the VWAP, is just identifying where the stock is relative to the VWAP. Is it above it or below it? And then that's basically the sentiment of the stock at that point in time.
Okay, so I off the line, I already have a couple of questions.
Sure.
So basically, when the stock is trading sideways, is that something people do? Like if it's trading sideways and it's kind of hard to tell where it's going, then do you use like the VWAP as a reference whether or not to try and trade it a little bit, since it's like on an upward or downward trend?
That's exactly right. So if I have an example of that here too. So great question. I'm going to go back to the 31st because this was the most kind of self-evident example that we could find. If you look at BNGO here, a lot of traders get really confused with the VWAP. They'll say, hey, the stock I'm trading, it just crosses over and under, and it doesn't respect it. What the VWAP's telling you there is that it's neutral, it's sideways, and it might not be the best to trade, unless, you have some type of really specific system around trading neutral or sideways trends, which not many traders do. But it is, like you said, if it is sideways, and if a stock is just crossing over and under it and over and under it, that might be a signal that it's too sideways and choppy to trade, and you might want to look at something a little bit more volatile, or something that is maintaining a more obvious trend to kind of attack with your trading.
Gotcha. Now, so for example, what I'm kind of thinking is if you see it going on that, horizontal pattern there, you're not going up or down, how long do you give it before you start to look for something volatile? Like at what point do you realize, like, okay, this thing's just moving sideways, there's no catalyst, we're moving on to something else?
It all depends on this trading system. It's really subjective in that way, just because I like trading the first 2 hours of the day. And so for me, I'm watching a bunch of other charts at the same time, and most of the stocks I'm watching are not going to be favorable. We might have, if I'm watching 10 charts, 2 out of those 10 might look good enough to trade, because I just have a really specific criteria of stuff I look for. Like I want to see good volume, over 200,000 shares traded per minute. I want to see it respecting the VWAP and maintaining a specific trend. And then I want to, there's also some fundamental, criteria that I want to see, like float size and stuff like that. But yeah, every stock's not going to respect it. But usually what happens is that you'll have stocks and sectors, like you'll have sectors that start to pop off, and that entire sector will trend and bring volume and volatility to it. So like today, I think we had NFTs. So we had like OCG, and you can see all morning OCG maintained over the VWAP and looked really good. And then we had TKAT. So you'll have sectors that start to pop off, and you can kind of see they're maintaining over this VWAP level. And another thing is that the more volume that the stock has, the better it's usually going to maintain that type of trend. Because, in order for a stock to maintain above the VWAP, you have to have buyers in there that are actually buying it to keep it up there, because if not, it's just going to drop. And the same thing if it's below it, you got to have sellers or shorters that are in there keeping it down. So volume's absolutely crucial in kind of identifying which setups and stocks look the best on that day.
Makes sense. So I have a question. It's kind of related. On our last episode, we had Shamar Anglin joining us, and that was pretty interesting too. We were definitely looking at a bit of charting, and he was talking about how he uses kind of a unique indicator that not a lot of people do, called the SAR, or the parabolic SAR. Have you ever used that? And you haven't?
I've never used it. No, I never used it.
Okay.
I'm a purist though, so I only use the VWAP in my own self-drawn support and resistance lines. And so, one thing in trading is that people can make a lot of different things work that I can't. And so if they can make it work, they can make it work. It's just not something that I've ever used really.
Makes sense.
But yeah, it's one of those things where really with the VWAP, you're just trying to judge sentiment. So it's like if the stock's maintaining above it really obvious, then it's that upward sentiment. Same thing if it's below it, it's that downward sentiment. But then it's also like stocks, it's a milestone level, especially with penny stocks. And so if a stock will open up underneath it, for instance, let me see. Yeah, so if a stock opens up underneath it, let's look at like YVR here. I think I just talked about. My favorite strategy to use with these is when a stock actually opens up below that VWAP level. It opens up down here. This is a trade I took a while back, and I look for it to open up weak, like open up below the VWAP, and then I wait for it to cross over that VWAP level. And that it's important for it to do that because other traders see it. And one of the reasons VWAP works is because so many other traders are using it and in turn basing their trades around it. So it's like they're playing off of it a little bit more. And so that way more buyers come in where you want them to come in because more traders are using it. As opposed to like a moving average where there's so many different variations of moving averages. There's the 9, there's the 12, there's the 20, the 50. And so, you got a group of traders that are trading off of each individual one. With the VWAP, there's only 1 or 2 different variations of it. And so it's just a really respected level with short-term trading, I think, or it's a really respected indicator with short-term trading. And so what I do is I wait for the stock to cross over it like this. And you can even see the volume come in when that happens. Like if you look down here, you can see the volume here. And so I look for it to open up weak, cross over that VWAP, and then I buy these pullbacks to it right here. So like I try to enter these like right here on the pullback to the VWAP, if that makes sense, and then ride it up for this bounce. Now, there's a lot of different ways you can do it. And this type of strategy is called a lot of different things. I've heard it called red to green move, ABCD, washout long. There's a lot of different names for it. But yeah, using that VWAP as that milestone level works really well for my style of trading just because so many other traders are watching it and buying when it finally breaks over that. They're seeing it as kind of this big milestone in that stock's movement.
Interesting. So it sounds like a lot of this depends on like other people reading the same kind of chart and then jumping on the same kind of train. Like it has to be almost a group movement in order for there to be any like upgoing trajectory, it sounds like.
Right, exactly. And that's what a lot of technical trading is. It's just what other people see. Like a lot of technical trading, like support and resistance, is how obvious or self-evident that support and resistance is. Because if it's really obvious and you have a lot of other traders that are seeing it as well, they're more likely to respect that level and buy it when it pulls back to like a support level. They're more likely to respect that level and see it. And so in turn, it usually has a higher probability of actually holding because of that, if that makes sense.
Yeah. And one other like quick thing about that too. So are you watching these like during pre-market or during normal trading hours? When's the biggest amount of time that you're going to put focus into watching these?
So I watch them in pre-market, and I usually build a watch list. And a lot of the time, that'll develop around just the big gappers of the day. Like today, we had OCGN, and you can see like this is pre-market from today here. So we look in pre-market, and we just look for volatility, volume, and movement. OCGN here had really good volume this morning, and so a lot of other traders were watching it, and that'll kind of give me an idea of whether I want to trade it or not. I think a lot of new traders get in trouble because they trade really low volume moves. Regardless of what like time frame they're trading, they trade really low volume moves, and volume is just super important for any type of technical trading because you got to have other traders that see it and want to play off of it as well. And so like volume's absolutely crucial. And so you can see this one, even at the opening bell, it had like 1.2 million shares traded per minute. And like I said, my minimum is like 200,000. but a lot of traders will get into trouble because they'll just trade really low volume moves. And especially in markets like this, it can get really boring and they'll start trading lower volume stocks just because, they're bored. It's out of boredom. But yeah.
That's as good a reason to trade as any, right? Like boredom.
Right, for sure. Hey, it happens.
All right, well, let's go over, like, Rohan, I know we wanted to talk about, like, support and resistance.
Yeah,
Like, how does that factor into this?
So you mentioned it a little bit earlier in the discussion, but could you go over how because you said you use this and then you draw your own lines. So can you show us how you draw your support and resistance?
Sure. So with support and resistance, it's like I said, you want to look at the most obvious levels. And so if we look at BNGO here, for instance, the first thing you want to understand about support and resistance is that where you're analyzing it is going to depend on the type of trade you're getting into. So like if you're scalping like I am, the more recent support and resistance levels are going to be the most valid and respected levels because you're short-term trading. If it's a longer-term trade, like if I'm getting into a longer-term day trade or a swing trade, then I want to look at a longer-term chart. So I look at like a daily chart or a weekly chart. But because I'm scalping, I just want to look at recent levels. So a lot of the time I'm looking for like big highs like this in pre-market. And so you can see like if we draw a line here on BNGO, you can see it test this level multiple times. And that's just because it's such an obvious level. Like you can see this big top up here. All the other traders see this level as well. And so what happens is that like you can see the high right there. When this thing moves up, people start taking profit because they're scared this is going to reject it. And so what happens, it goes up here and in turn, it rejects it and it comes back down. And this is from, again, people taking profit at this level. The same thing happens here. We finally break over it. And the common logic with technical trading is that previous resistance turns into support and vice versa. Previous support turns into resistance. And so, it confirmed it here, this is what we call a confirmation, which means it just respected the same historical level. When we finally break over it, now that level is kind of turning into support. It was previous resistance, and you can see it pulls back to it here, bounces back to here, bounces, and kind of wait, I lost the level. But you can kind of see how you can base trades around these really confirmed levels. If it finally breaks up here, a lot of traders are buying this pullback, just because they're assuming this is going to hold it up as support, if that makes sense. And so it might seem a little bit confusing, but you just want to look for the most obvious levels, the levels that most other traders see, because those are the levels that most traders are basing their trades off of. And so again, if you look at this, it was resistance here. It's a really obvious level. It's the pre-market high, which is a really respected and obvious level. So when we finally run all the way back up to that, it gets rejected and pulls back pretty majorly because, again, most people are taking profits. People are using this as a profit target. And so when it finally gets up here, they're taking profits, which causes the stock to drop. And then it finally breaks over it, pulls back, and kind of the cycle continues. It's something that you condition yourself to kind of look at and see, and you just got to condition yourself through repetition to just look at it and see it over and over and over again until it becomes a little bit more, second nature. But yeah, and there's a few major levels that traders will usually use, especially day traders. Like day traders, a lot of the time will look at the pre-market high. So, they'll look at this level right here, which is just the high of pre-market. Another level they'll look at is the previous closing price. So if we look at, I have this study here. So this is the previous closing price. This is where the stock closed yesterday. And so it's the level essentially where a stock will go from red to green on the day. If it breaks above this, it's technically green on the day. And if it breaks below this, it's technically red on the day. And so that'll give it some sway as well because other traders are watching it and it's a relevant kind of milestone level. And so a lot of traders are basing their trades around it. And, you'll get some support here, some resistance here that you can see. But, you just there's a few levels that traders naturally look to, and then you just look for really obvious, like confirmed levels. So like another one, I could see this here, which really obvious low right here. If we zoom in, you can see it probably touched this level like 5 or 6 times on the 1 minute chart, like here, 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 here. And so this is a really obvious, level that a lot of other traders can see. And so sure enough, it's never going to follow it perfectly, but we had a lot of support here as well. resistance here, and so that's just kind of how you develop different levels. You don't want to go too crazy with it because it'll cloud your chart up pretty quickly, but you want to just kind of look for really major, self-evident levels that you can, base your trades off of. And the general logic is you want to find really obvious levels that other traders see as well.
That makes sense. Yeah.
One of the things that I try to do with the VWAP is like I just look for sentiment changes. So if we look at, I have an example. Let me see. So if we look at B and I guess we could look at B and GO. If you look at on 420, wait, let me make sure I got the day right. Yeah, it's 420. If we look at 420, this one ripped up at the opening bell, maintained above this, and then when it finally broke underneath it, it maintained underneath that for the rest of the day. And so again, it's like it's an upward trend up here. And then when it breaks underneath it, everybody's sentiment changes. Everybody sees it as weaker because it's strong at the open. Everybody sees it as strong. And then when it breaks underneath this level, the VWAP, which is, like I said, a milestone level, other traders see it as weak and in turn are less confident in it. And it kind of causes a sentiment change.
What I was curious about was like scalping though and taking profits. So how do you know, and at what point do you decide like, all right, I've ridden this thing up, I've taken the ride for the green, I'm at a point where I've made enough money. When do you start feeling like it's about to go down, or you're about to start riding the downtrend? When do you get out of the stock?
So I'm a scalper, so I might hold a stock for 30 seconds. But I think it's a good thing to talk about because I think a lot of new traders get stuck in this limbo where they're kind of only like buying high of the day breakouts and they're only taking profit on these big moves up. But like a lot of the time, pullbacks are going to be better to buy into, if that makes sense, because like I showed you here, experienced traders a lot of the time are taking profit at major highs. So if you buy these high of the day breaks, you're going to get faked out a lot, and it's going to fail a lot because a lot of new traders only see like the only sign of strength new traders know a lot of the time is just when it breaks a high. But a lot of the time you're going to get faked out doing that because other traders like me and experienced traders are taking profit at these highs. And so that's usually where I prefer to take profit, mostly just because that's usually where we get these rejections here. And so I might buy on a little pullback. I'll go over the example that we had on YVR. I might buy on little pullbacks, but I'm almost always taking profit at major highs. So like with this, I jumped in this trade here and I took profits right here. So I just took profit at this highs. Like the common saying is you take profits into strength. And so you take profit into strength. You don't want to wait until the stock gets weak to take profit. And so usually if you're taking a longer term trade, even if you're not scalping, you just want to look for a confirmed level. What I try to teach people is like you want to look at the level where it's the most likely to fail. And it may sound a little simple, but I'm taking profits at these highs right here. Another example, if you bought this pullback here, for instance, I would take profit here at this. And it's hindsight trading, so it's not really exact. But what I'm trying to say is I try to take profit at previous highs or at least before them, right around them or before them, because so many other traders are going to be selling once we get to these highs. Like here's this high. So many other traders see this, and so they're going to try to take profits as well there. And so there's a lot of different nuances to it, but I'm usually trying to take profit at previous high days or at least right before them.
What is like a percentage increase that you see? You're like, okay, I'm satisfied with that. I'm going to take my win here.
So I don't really go by percentage increase. What I do go by is risk reward, right? So what I try to do is like I use a 1-to-1 risk reward ratio. And so and that's a lot of traders are going to say that's a bad ratio. They're going to say I should shoot for 2-to-1 or 3-to-1 reward to risk. With scalping, it's a little bit different. And so there's a direct correlation between accuracy and risk and reward. You could be really accurate with a 1-to-1 ratio and still be profitable. And you can be not that accurate with a 50% rate, accuracy rate and still be really profitable if you're having a good enough risk reward. With scalping, I'm just using a 1-to-1 ratio. So it's like if this is my risk right here at 410 and I enter this one at 420, I might take profit at 430 and get out at 410. And so my reward is 10 cents and my risk is 10 cents. And so that way it's break even and I'm basically making my money with good accuracy. Good accuracy is what kind of carries the system, where if I had a tighter risk there, say I had 415 as a risk, right here. So I say I jumped in at 415 and I had 430 as a reward target. Or say I jumped in at 415, had that 410 risk, so a 5 cent risk, and then had that 10 cent reward target up to 425, then I would have a 2-to-1 reward to risk ratio. And it might get a little bit confusing, but my point is I use a break-even reward to risk ratio. So I'm trying to at least make back what my risk is in that trade.
That makes sense. Yeah, it was nice hearing that example and kind of visualizing it, because part of my brain wasn't even thinking about the risk being like what it was previously sitting at and can fall back to, you know?
Right.
So thanks for that. Quick
Yeah.
question. So this is much more of a zoomed out question and more so relative to day trading in general. And I wanted to ask you because like you obviously day trade quite a bit and I don't. So I think like way back in episode 1, I asked the question of taxes to Mike Murray, right? Obviously, when you're thinking about like long-term holds, you can pay long-term capital gains, let's say lower tax, or say you're just holding and you're like not even into stock trading that much, and say you have a retirement account, right? You're getting like the best tax advantage there. But my question is, as a day trader, because you're making those short trades, you're paying short-term capital gains tax of what, 30-40% almost. There's like a certain element of like, I feel like you have to be confident enough in your ability to day trade. Of course, some people just do it for fun and figure it out. But what I mean is you have to be confident enough in your ability to day trade that you know that you can make, I don't know, in excess of that percentage, right? Like say you make 100K and you're paying 30K to taxes, then that's worth it because like you made the whatever on top of that. I don't know, like, so for you, what's your philosophy there, I guess?
So with day trading, it takes a long time to really be successful. It's very difficult, is what I always try to tell people. It's extremely difficult. Most people are going to fail at it. And so it's one of those things where I always try to tell people like this: if you're struggling, you shouldn't be day trading. Like if you're hurting financially and don't have that much money, like I get people that come to my stream and they're struggling and they're low on income, and I always tell them the last thing you want to do is day trade. Day trading is something like if you're comfortable with whatever you have right now and you have some extra money and you want to learn a skill, go for it. But if you're struggling, don't do it because it's extremely difficult. Most people are going to fail at it, certainly. And it's something that takes most people years to learn. Like if I could go back in time, I don't know if I would learn day trading first, but it is a profitable thing and it can be really profitable. With taxes though, with it, it's there's a lot of different nuances to it. Like there's the wash sale rule, which is if you're trading the same stocks, you can't write off on your losses if you trade the same symbol over and over again and you previously had a win and a loss on that symbol. And so there's a lot of nuances with taxes. Ask your CPA guys, not me, But yeah, it's one of those things where you just got to understand what you're getting into with it. And, it really is going to depend on personality. Like I'm really skeptical as a whole. I'm a skeptical person. I'm skeptical of all these stocks I'm trading. And I don't trust the long-term viability of any of them. And so in turn, I take very short-term quick trades and try not to hold anything overnight. But somebody else that's more patient and more somebody that looks into these companies a little bit more and prefers fundamental analysis, they probably will enjoy longer term trading or investing. But with day trading, I'm just in and out. I don't have to worry about it overnight. I don't have to worry about things going sour on me overnight. And it's one of those things that it just fits my personality the best.
That's nice, and that's got to be one of the biggest things too. Is like I know so many traders, like me included. If you're in a stock or you're in a position and something happens in Beijing or it happens in Hong Kong overnight and you're screwed when you wake up, like that's a terrible feeling to wake up to in the morning. You're starting off the morning red, like your chart's already broken. Like it's not a fun feeling. So it is kind of nice, turn it off at night, start back up the next morning. I do kind of like that aspect of it.
Yeah, for sure. I definitely enjoy it. It's good. I finish my day at like 11 o'clock in the morning most of the time, 11 or 12. And so then I can kind of hang out and I have other, stuff I do as well. But it's a nice few hours of work in the morning. It can be a stressful few hours, but it's a good few hours though.
That's awesome.
Hell yeah. That's awesome. All right, John. Well, that's kind of all the questions I had for you. Was there anything else that we missed that we should cover?
Let me see. I don't think so. I think that's basically it. Again, like we could look at longer term, I guess. I could look at longer term support and resistance just to show you guys a little bit more broad example of this. To look at a longer term example, like if you're taking a longer term day trade here, here's you could look at the longer term chart, and it's the same logic, it's the same concept that we just looked at for support and resistance. You want to look for really obvious levels on the longer term chart. This is a daily chart, so every candle equals 1 day. And so, for instance, the obvious level that I can see that kind of sticks out on YVR here is 250. You can see 250. And another thing, I also wanted to say this: it's never going to fall in line exactly to your level. Like it's never going to touch exactly off of that level. What you want to do is you want to have a range. So instead of looking for it to hit exactly this level, you can kind of look at it like this, like anything within, like this right here. Maybe that's a little bit too high. Anything within this range. So it might not be exact, but like anything that falls within this, you can consider to be that same kind of support and resistance area, if that makes sense, like this, because it's never going to hit the exact same. So you just want to find the most confirmations, we call it, the most touches to that specific area, and then find the most obvious level kind of in between those. The other thing I do is look at half and whole dollars. And so you'll see a lot of the time I'm looking at like 250, $3, 350, but it's because I think we talked about it last time, they're big psychological levels. So it's like other traders naturally watch whole dollars and half dollars like that. And so if you look at the chart, a big level is 250. It's gone up to that a bunch of times, come back down. You can even see like $3 right above it right here. It has this big level here that's been touched a bunch of times as well. So yeah, you got to look at it from, there's a lot of different ways you got to look at support and resistance to come up with like which ones you're going to analyze and watch. But you get the hang of it the more you do it. You get the hang of it the more you kind of condition yourself to.
Awesome. Well, yeah, no, that was awesome, and I appreciated the little piece of advice, which was obviously don't look directly at the line, but kind of around it. Not everything's perfect.
Right.
So thanks for sharing that,
Yeah, sure.
John. Amazing episode, amazing conversation. Learned a lot in this short little bit of time. I'm sure Mike would say the same. And as always, appreciate you coming on, being our first ever repeat guest, which is just so awesome. Glad to be at episode 10. And I'm sure that after this conversation, our audience will have some more questions, and hopefully we can have you back on.
Yeah, hey, I'm proud to be here. It was fun. I'm glad to be the first returning guest. Y'all are moving though with episodes, episode 10.
You have an approach to it that's so, take it for what it is. You're not like trying to overhype it or sell it, but you're also, give you enough information so that we can be informed when we're doing this, right? You enjoy day trading, but that doesn't mean it's going to work for everyone. And I love that you're, kind of pushing that idea in the sense that like just take it for what it is. There's a lot you can learn with it. There's a lot you can do, but it's also risky. All right, John. Well, we'll let you go, but appreciate you coming and hanging out for a bit.
All right. See you guys. See you next time.
Thanks, John. See you, man.
Later, guys.
Beginner trading. That was pretty sick.
Yeah, John London, dude. He's always a good guest. He's awesome. Breaking down the charts.
He's like the best. He's so chill. He knows his stuff.
Dude,
I feel like
we have other guests. You can't say the best. We'll make other
listen,
people feel
I am the YouTube equivalent of the dad that goes to like every single one of his sons and goes, "You're my favorite son." That's how I feel about guests. Like,
you are all the best.
Yes.
Well,
Very nice.
we do have the best guests. I'll give it that. We've had some amazing guests.
Mike, how's the portfolio looking?
Yeah. I mean, I said at the beginning, Torchlight is up for the time being. I think it was up like 12% today at the end of the day. So not great. I mean, yeah, did I YOLO everything into Dogecoin earlier this week? Yes, I did on Monday. Threw a fat chunk into Dogecoin. Totally worthless. What a shitty Tuesday. Totally
surprise, motherfucker.
Obviously, like today was a real shit show because of the capital gains taxes going up.
We did see also a bump a little bit because Biden announcing that he was going to do more green energy investment. So we saw some.
Yeah, well, he kind of outweighed that announcement with his announcement about 43% capital gains, didn't he?
He was like, "I'm bringing it up." Psych.
Yeah, he kind of slow played us all there. But yeah, we definitely got punched. So yeah, it's been fun. It's been a fun day.
What are you gonna do? What are you gonna do, huh?
Yeah, it's all good.
That was
know
a
what that-
weird impression,
Yeah,
but
well, as always, ending on an awkward note from Rohan. I think we'll take it out from here. Thank you. Perfect. That's
just
what I was
kidding,
looking
folks.
for.
Of course, we wouldn't let you go without saying first, hit the like button, subscribe. What are you doing? Hit the notification bell for the First Trade playlist. Check it out. First Trade on all your favorite podcasting platforms, Apple Podcasts, Spotify. You know what it is. Folks, also, Discord. Pretty cool app, right? Guess what? You can go on there and you can join our server and you can talk to us and ask your questions. And you can decide what the next First Trade episode is going to be about. So why not join? Seems pretty easy to me. Last little thing, leave a review on Apple Podcasts. And with that,
Now
my
that
name
you've
is
all been
Rohan.
sold to,
And
yeah, thank
Michael needs to take a nap. So bye. Yo, yo, yo. What is going on, everybody? It is your boy, Rohan. And you just saw me on First Trade. Whoa, I'm here now? Surprise. Nah, we got a couple minutes to kill before pre-market prep at the close, starting in about 9 minutes here. Might have Spencer hop on here and just BS for a couple minutes. But real talk, guys. I thought, why not? What a better time to go for some feedback. So that was a great episode. John London, folks, at Beginner Trades on Twitter. It'll be in the description. It'll be in the chat. So make sure to give him a follow, because he's a real G. Love his input, his knowledge, and you know what? As always, he is a fantastic guest to have on the show. Would not be surprised if we had him for a third time. But beyond that, folks, what's your feedback from the show? We want to improve this. We want to grow First Trade. Like I mentioned, that we're also doing this as a podcast version. So while I have you here, just wanted to ask of you guys to drop some feedback. What are your thoughts on the show? I know we already had mentioned some stuff about the charts, and just let me know. Meanwhile, while we're doing that, there is this beautiful thing on the YouTube page. Luke likes to say, it's a nice thumbs up, and if it's gray for you, it really should be blue. That's how you know you're a cool person. So while we're waiting here, guys, come on. What do we got? 33 likes? There's 193 of you here, supposedly. And 33 likes? Come on. We can do better, because this is how we know to keep making shows, how to keep investing and providing content for you guys. It's not for us. It is for the community. So, you know what? That is a good point. Podcasts, you can't see shows. Charts, yeah. So there's certain episodes that obviously are much more easier to enjoy on a podcast version. When we're looking at charts, you kind of got to see the visuals. So, yeah, obviously, Sweet Life Trader, good point there. And if you're not doing these shows live, I wouldn't go talking about old news like the Biden stuff. You know what? That's a great point. So maybe something to definitely take into account. Thoughts on having new traders for their portfolio discussions and checkups? Absolutely. JP, shoot me an email, rohan@benzinga.com, or DM me on Twitter. My Twitter is in the description of this video. And if you want to come on the show, or if you're that new trader you're talking about, we would love to have you on. And also, guest suggestions. Anyone you want to see on First Trade, let us know, because then we know to reach out to them. And maybe you can tweet at them and say you want to see them on First Trade. That'd be sick. By the way, I did see that like number jump up to 42. You guys are killing it. Keep going. Keep running it up. Love to see that. Now, we got just a couple minutes here before pre-market prep at the close, so just hold on tight. You know what? Let's see. Does anyone want to hop on right now? That would be really random. Does anyone want to call on and give feedback? Comment if you want to call and join this right now with audio. I can have you patched in through a phone number. And that would be pretty interesting. I would love to hear your feedback. 47 likes. There we go. There we go. Doge is good. Doge is good. I am praying for Doge. It's up a little bit, and we do have Mark Cuban going on the Helen show, which and he's gonna be talking about Doge. He's disclosed this, so hopefully he runs it up a bit, and I can break even on that trade because I got in pretty high.
Wait, how much money have you lost on Doge?
Not that much. I only invested like 400, so I like at this point I'm losing like 100 on it.
All right. Okay.
Yeah.
Jesus. Hey
Listen,
man,
I really thought the 420 thing was gonna be
look.
a run up.
I hope you learned a lesson. Did you at least learn a lesson or no?
I learned to stick to my guns because I wasn't gonna go into Doge for the longest time.
Yeah.
Like at that high of a price, right? I didn't have a way to buy it earlier when it was much lower, so I was like, I'll just stay out of this one. It's fine.
Yeah.
And then the issue is basically I was telling myself, I'm like, everyone's talking about this. It's a hype. It's my rule. Like, I'll just stay out of it. I'll let other people make money. And then at 39 cents over the weekend, it was just gnawing away in my brain. I was just like, it could be 420 run up. I could make a quick little thing here. And then I went against my instincts, and I should have just stuck with that. That's my lesson.
That's it. That's it. All right. Well, you learned a lesson. Stick to your guns.
Yes.
All right. I'm gonna hop because we got the At the Close show, guys, starting in 4 minutes. I'm gonna go hop for that. Rohan, if you want to stay on and bullshit, you can. But I'll be starting up in 4 minutes here.
All right, folks, you heard it. You're stuck with me for another 4 minutes. Oh, that was not the right sound. Do you guys want to hear more soundboard sounds?
They ask you how you are, you just have to say that you're fine when you're not really fine.
That's my favorite.
They ask you how you are, they ask you how you are, you just have to say
Sorry,
that
it
you're
keeps playing. I'm really
They ask
trying
you
to
how you are,
stop
you just
it.
have
All right. Oh man. Here, let's do another one. It's really entertaining, honestly, to have a soundboard. Everyone should have one of these. When you do your Zoom meetings, like, have a soundboard. Why not? You know, you can do your job interviews, your virtual job interviews, and be like, "What up? My name is Rohan, and
you're fired."
Or, I don't know. I'm just BSing here, guys. Just trying to keep you entertained for the next 3 minutes. I'd love to see make a Benzinga sound pack. Oh, whoa. You know what? That could happen. I don't know about the copyright legality of that, but if we're talking about only Benzinga like voice sounds, we can make that happen because we have a couple of them, especially from pre-market prep. But you know what? I will talk to my main man, Joe. Oh, look, producer Aaron's on here. Unseen Solvers. Yes, I'm Indian. So is this guy.
Yes, I am. Hey, what's up, everybody? How's it going?
What's up,
I just-
producer Aaron Thomas?
I am in Doge as well. Hopefully it runs tomorrow. But
Hopefully.
yeah, you know.
You know, I think Aaron was just bored because today's the first day he hasn't been on a live stream all day, and he's like, I need to get on air.
Zunade, you're killing us. You're so funny.
Oh, man.
Zerka, I see you out in the Twitch sphere. Don't forget about you.
Oh yeah, I didn't even realize that. We got some. Well, we have a lot of emojis coming.
Zerka's an OG on our Twitch channel. I appreciate him. He stays strong there.
Zunade, you're made in India, but where in India? I'm
The
curious.
self-proclaimed hardest workers at Benzinga. Yeah, if you guys want to, see where and when we said that, check out the what is it? The behind the scenes video. Oh yeah, we went 36 hours without water. Guys, make sure to check that out.
Oh, Zunade, Hyderabad. Almost my whole family is from Hyderabad, in Maratpally. So shout out.
My family's from Kerala, so.
Nice. Well, I'm actually Gujarati, but a lot of my dad's side grew up in Hyderabad, so kind of an interesting situation. So many Patels, bro. Yeah, all the Patels don't even realize I'm Gujarati because they're like, I've never heard of your last name, Makhecha. You're Gujarati? What the heck? And I'm like, yeah, dude. I mean, I know everyone knows you are, but half these people don't get these jokes, so I'm sorry.
People only realize that I'm Indian as soon as they see me. You'll never know that I'm Indian by like hearing about me because I'll just disclose my full name. It's Aaron Thomas. It's definitely not Indian, so it's a lot of confusion there when people meet me at first.
Oh,
But
this is about
I think
UP?
this is fun. This is a quick little BS sesh.
Yep,
3:30, so I think it's time for to pass it on to Spencer.
that is the case, folks. Sorry for boring you for as long
Yeah,
as we did,
yeah. Sorry about that, guys.
but it's time to pass it on. All right. See ya.